So we all know the saying, cash is king. Although I guess in some monarchies, at some times, cash is queen might be more accurate. But anyway. Yeah, this is like 10, 11, I got $13 here and some change. Some fell on the floor, maybe $14 if you count the quarters. I don't really carry a lot of cash with me. But what about cash in your retirement account? In 2022, a lot of people sold their investments, moved into cash, thinking that was a prudent way to preserve capital in a market downturn. Now, some cash is a good idea. It gives you the flexibility to add to a position if you spot an opportunity, gives you some wiggle room while trades settle, and just gives you a nice buffer to help ease your mind if you have a lower risk tolerance. Now, typically, a financial advisor will allocate somewhere around 5% to cash, sometimes even higher, closer to 10, 15, maybe 20%. Really depends upon the situation. But during volatile market conditions, does it make sense to use a higher than normal cash allocation to preserve your capital? I just wrote about this for U.S. News and World Report. I will link the article below. Here are some factors I wrote about to consider when you're determining how much cash to hold in your investment portfolio. 1. Cash can drag down portfolio performance. Over the long run, holding large amounts of cash means you're incurring an opportunity cost because you're not investing in something else that could have returned more. Now, I know 2022 was scary for many investors, and for many people, even 2008 was still fresh in their minds. I totally get that. But investing in stocks over time, not day trading to beat the market or stampeding into cash when markets tank, investing in stocks for the long term is a proven way to build wealth. Just is. 2, risk tolerance can affect your cash balances. So if you have a long time horizon, then it's no surprise you can be more aggressive and hold a higher percentage in stocks and bonds rather than cash. But if you're in retirement, you might want to have some more cash on hand to pay daily expenses and any unexpected one-time costs. Life happens, right? Got to be prepared. But don't let the cash take up too big a portion of your portfolio because it can reduce the performance. Be sure your portfolio is allocated to meet your retirement goals, and be careful because if you have too much cash, we talked about that a minute ago, that may result in too little money for a successful retirement outcome. And by that, I mean not outliving your money. 3, cash holdings in actively managed funds. If you own an actively managed fund, meaning something that's not just tracking an index, there's a very good chance you're paying a manager to hold cash in that account, which is something you can do yourself without paying anybody, right? It's common for fund managers to hold about 5 to 10% in cash to pay out redemptions, meaning when investors sell shares and want their cash, and they also want some cash on hand to spot an opportunity. But ultimately, when mutual funds hold too much cash, that can reduce your fund's performance. Here's one fund that has nearly 17% in cash. I think that's kind of crazy. And its expense ratio is 1.2%. So you're paying these guys 1.2% to hold 17% of the money you invested with them in cash. It seems like they could do a little bit better than that, doesn't it? 4, cash equivalents are your friend. If you have a specific short-term need, like a new roof or a new vehicle, it's prudent to hold some cash to cover those expenses rather than putting those funds at risk in the market. Here's where you can use a cash equivalent, like maybe a treasury bill, which would pay more than just cash, or even lock it up in a CD for a short period of time where you would get a guaranteed rate. Look into treasuries or CDs if you need cash for a specific item and you want to get a little more return. I will link up the original U.S. News article below. And also, if you want some insight into your portfolio, is it allocated the right way to help you not outlive your money? Do you have enough cash or too much cash, too many bonds, too many stocks? Here's the URL for Blue Marlin Advisor. I'm happy to help you. One of my colleagues over there can help you out. Fill out the form that I will link to over there, and you can set up a call with one of us. Looking forward to speaking with you, and I hope you found that helpful today. Thanks.